Okay, so this is the final video. We're going to wrap up the section on mutual funds. So if you don't know what mutual funds are, go to the first video about on the series, and I talk about what a mutual fund is and how it works. And we've talked about some of the more common ones that you find within your 401k so that you guys have a better understanding of what you're looking at when you're looking at those investments. Now we're going to discuss some of the ones that are less common and more specialized. So these may or may not be available within your 401k. I am starting to see more of these becoming available for investors through their employer. So you'll just have to double check to see if you guys have this available. But so one of the categories that's more often than not showing up are international investments. So as the name would suggest, okay, it's going overseas, kind of self-explanatory, right? But so if you see global or international, that's what they're referring to, okay? It's going to go into big corporations overseas. So again, they're not going into like startups, they're going into, big companies. And there's still going to be companies, there are going to be names of companies that you're going to be very familiar with. So when you see international or global, they're going to be going into what are called the developed economies more often than not. What do I mean by developed economies? So it's going to be economies like the US, which they do actually hold still some of that within those funds. So US, Canada, Western Europe, Australia, Japan, South Korea, those are considered developed economies, okay? And so they're going to be heavily investing into large capitalization companies within the overseas markets. So again, if you remember large capitalization, it means these are, they have large market capitalization. That's what large cap means. So capital market. So, or market capitalization basically. So that's what those funds will go into now. Some of them will still have exposure to what are called the developing economies or emerging markets, or those are usually the more common terms that are often used. So those are going to be like areas like Taiwan and the BRICS countries, which I'll go over in just a second. They'll also go into, different countries in South America, parts of Africa, definitely parts of Eastern Asia. So those are the emerging economies or emerging markets or developing economies. Okay, so now some of the funds will have a large portion when they say international or global. They'll have a large portion in the developed economies and have a small portion in the emerging economies. Okay, or they might be the pardon me. They might be the opposite. Some of them will have a bigger portion exposed into the emerging economies or emerging markets, and a smaller portion in the developed economies. So there's only one way for you to find out how it's really allocated, and that's to look at what's called the fund fact sheet. So every mutual fund has these, okay, and it's a very quick overview of how the fund invests, what its objective is, how it's broken out far as its portfolio allocations. So it's a great way for you to get a lot of information about your fund pretty quickly. Now, the problem that most people run into with this is that they feel it's unapproachable, it's daunting when they first look at it. And the reason most people feel this way is because when they see the fund fact sheet, which usually is maybe 1 or 2 pages. I've never seen one go over 2 pages, to be honest. Unless it's in the digital format, then it's usually like still 2. I've seen a couple of them because they're in the digital format go to 3, but the vast majority of them are going to be just 2 pages. Okay, but the problem is that people look at it and immediately they start looking at everything everywhere. And they're not reading everything. They're just picking out pieces, and they see percentages and tables and pie graphs and a whole bunch of text, and they're just like, oh my gosh, this is a lot of information. The problem is that that people get overwhelmed and they get intimidated by looking at this information because they're trying to pick out just little bits of information quickly. You can't do that on a fun fact sheet. You are going to have to actually read through it. Now, I'm going to give you fair warning. It is boring. It is literally like reading a textbook, okay? Because it's written by people in finance that are, and it's gone through the, law department to make sure it's all, legal and it's following regulation and the wording's just right. And so it's going to, read pretty dry. So you need to brace yourself for that fact and just, just come to terms with it. But the best way to read a fund fact sheet is to read it from just top to bottom. Don't try to pick out just little bits of information that you think are pertinent, because the problem with that is unless you know what you're looking for on a fund fact sheet, you're going to just pick out things and it's going to be out of context. You don't want to do that because then you're going to make the wrong decision because you've got the wrong impression, you've got the wrong information. So you really want to read through the fact sheet, the fund fact sheet, from top to bottom. Okay, so if you want to look at the graph, that's fine. Read the graph, understand it, as much as you can, and then move on to another area. Read through that and try to understand it the best you can, and then move on to another area. And then just repeat the process all the way until you've gone down through the whole thing. So this is the problem that most people have, and they don't understand how to read it. It's really not intimidating. Like I said, if you just go from top to bottom and just commit to actually reading it, it actually is quite informative. It has a lot of good information, and as it should, because it's supposed to inform you. That's the whole point of it. So the best way for you to understand how the portfolio is allocated is to read through the fund fact sheet. Okay, unless you really want to read through the prospectus, which that is way more than 2 pages. And absolutely, it's available for anybody, for any fund that is available through your 401k. You have legally, they have to provide you access to the prospectus. So if you want to read through that, that will go through in detail everything about that fund. But if you want to just get a quick overview, the fund fact sheet will give you that information, and they also have to provide that for you. So it's easy to find online, usually through whoever your 401k plan administrator is. So if you want to get a better understanding of, okay, does it have a lot of emerging markets or a lot of emerging markets and small developed economies, or do they have a lot more developed economies and smaller emerging markets? The fund fact sheet is a great way for you to find that out. They're usually on there it shows like the top 10 to top 25 holdings. It usually will go over like the different areas that they're investing into. And so it's again, just a high overview. If you really want to get into the nitty-gritty details, and you need to read the prospectus. There's the summary prospectus and there's the full prospectus. So be aware of that as well. The summary prospectus is a condensed version of the full prospectus. So, so if you really, really want to get into the nitty-gritty details, you would read the full prospectus and not the summary. So, but that's, again, just a quick way for you guys to get some information about your fund and how it's allocated. Now, some of the other categories that have been coming out, so I was really surprised to see one this aggressive, which was emerging economies. So what that fund does is it does not go into developed economies. So the emerging markets or emerging economies, new economies, however they want to word it, okay, it's focusing mainly on the regions I just told you about and what are called the BRICS countries, okay? So BRICS, Brazil, Russia, India, China, and now they've added the S for South Africa. So it's going to be most of the time those funds will exclude the developed economies. So they'll exclude the US, Western Europe, Canada, Australia, Japan, South Korea, and they'll include, you know, pretty much everybody else. So some of the emerging markets funds will have a small sliver for the developed economies. So again, you just have to look at the fund fact sheet to see if they do or not. That is an incredibly aggressive investment. So be aware of that when you're looking at you know, investing into those. They definitely have their place, but you need to understand that if you don't have the risk tolerance for it, then they do not have a place in your portfolio, because they are very aggressive. And the reason they're aggressive is because it's simple as they're overseas and their economies don't mirror the US, their policies don't mirror the US, and so they can be open to a lot more volatility, a lot more risks, depending on the economy, location, the size, I mean, just a million different reasons. So be aware of that, but they do have, you know, I am starting to see more 401k plan administrators offering that. So that was very interesting to see. Another one that I've come across that I'm seeing more often, which also was very surprising, was one for real estate. So when I say real estate, if you do see that in your 401k, they're not talking about personal residence. They're not talking about buying homes, okay? It's commercial real estate. So these are big corporate buildings, plants, you know, land that companies will lease to build on. And so, I mean, there's just, you know, it's all commercial real estate. And when I say commercial real estate, I am not talking about like the mom and pop strip malls down the street from you, okay? We are talking, again, these are you know, multi-million dollar developments. And so you need to make sure that you don't overexpose yourself into this area. It is not meant to be, you know, the full portfolio. It's not meant to be your whole 401k portfolio. So, you know, you need to be very cautious about how you're going to allocate this. You don't want to, again, have too much exposure into it, but if you have, you know, the understanding for the real estate sector, and again, this is not private real estate, this is commercial real estate, then this might be a great option for you. So something for you to consider. Let me see if those were the more common specialty categories that I've seen more recently. And so, oh, and there's ones, you'll see some, I have seen this as of late, also utilities and commodities. Those also, you need to make sure you're not overexposing yourself into these areas. You know, if you want to have some exposure into them, great, but don't overexpose, meaning don't have 100% all of it into that. That's not what would be, you know, considered prudent investing. So let's see, and those were really, yeah, those are pretty much all of it. Again, there's just too many categories. I can't cover all of them. And the mutual fund industry keeps coming out with new ones. So I can't cover every single possible category out there, but those are more often than not the ones I've covered in this series of videos. You know, the bond funds, the income funds, the balanced funds, all the large cap, mid cap, small cap, and then some of these specialty ones I've discussed today, are more often than not the ones that you'll find, you know, in the 401k of options available for you to invest into. So, all right, so that concludes the series. We'll start discussing some of the more current events that have been happening and the current trends that we're starting to see, both in just in the political arena and in the economies around the globe and within the US markets. And And hopefully this helped you guys. If you guys have any questions, as always, go ahead and comment in the comment sections below. And as always, go ahead and click that subscribe button, and I will see you guys later.